Next, third question from non-profit organization chapter. This third question, that is the subscriptions and medicines and equipment and buildings is given as per year wise. Okay, how to treat and how to prepare the income and expenditure account and the balance sheet. Okay, that will be seen. First of all, if you come to the question, that is the following receipts and payment account of hospital for the year ended 31st March 2015. So in this question, the hospital name of the hospital is not given, and the receipts and the payments account. Under receipts and payments account, there is a balance of drawdown, that is 5,600. It is opening balance of cash, and the subscriptions, donations, charity show, unpaid for medicines, salaries, sundry expenses, equipment, charity show, and honorarium. Honorarium means it is a that is a sum of remuneration is given to professional services persons. Okay, they are rendered the services without they are rendered the services with a nominal charges, that is called as honorarium. Okay, for example, is there any this hospital na? In this hospital, one of the doctor comes to visit to the patients with a nominal fees. Okay, for example, his somewhat traveling expenses like that. Okay, that is only the amount maximum he charged. That is called as honorarium. Okay, it is a less compared to market value. Okay, to the doctors. So that is only the honorarium. It's a nominal fees. Okay, that is a payment made to a person for his services in a volunteer capacity also. Okay, volunteer capacity means without any without expecting any benefits. Okay, they are render the services to that hospital in this question. Okay, so that is only the one. Next one, balance of carry down, that is 3,600 rupees. Okay, 3,600. This is closing balance of cash. And if you come to the additional information, there is subscriptions due 1,000 rupees and 2,000 rupees. So that is the subscriptions has an adjustment. Okay, that is you can take into subscriptions. Subscriptions due on 31st March 2014 means the present year is 31st March 2015, means this is the subscriptions are last year subscriptions due. Okay, that is last year outstanding subscriptions. Okay, this is the subscription we should be deducted from subscriptions. Okay, whatever the received amount. And subscriptions due for current year. Okay, that is 31st March 2015. So the subscriptions due 31st March 2015 value you should be add to subscription received. Okay, and in current year, that is only the adjustment for subscriptions. Next, stock of medicines. Stock of medicine. Okay, that is a stock of medicine. Opening stock of medicine is 800 and closing stock of medicine is 6,000. So in this stock of medicine medicines paid for medicines, it is 24,000. So in this 24,000 plus opening value of 800, okay, there's still end of the year it is the value of medicine is only 6,000. Remaining medicine has used to given patients. Okay, that is only the calculation of stock of medicines used. Okay, now that is the medicines used. That is the medicines used. You should be write in expenditure side under income and expenditure account. Next, value of equipment. It is opening value is 16,000 and closing value is 16,000. Okay, so that is a equipment also has an adjustment. Okay, so for this equipment, purchase of equipment it is 12,000 and opening value is 16,000. Total value is 16,000 plus 12,000, which is equal to 28,000. out of 28,000, but end of the value of equipment only 21,000. So the difference of 7,000 rupees is called as depreciation on equipment. That is depreciation on equipment. That is also we can calculate how to it. And the value of building, that is opening value of the building, it is 80,000, and the closing value of the building, it is 72,000. The difference of 8,000 is called as depreciation on building. Okay, like that we can differentiation we should be debited to income and expenditure account. Next, here it is clearly mentioned that donations are to be capitalized. Okay, donations are to be capitalized. Okay, ticket to donations. Okay, because of that is the donations has an adjustment. Okay, and the buildings, there is no purchase of the building. Okay, like that you can identify the adjustments and the ticket to receipts and payment account. Okay, now you can solve the solution. Start to solve the solution. That is, so first of all, opening balance of drawdown, that is 5,600. Opening balance of the cash, okay, that is the cash amount. You can write opening balance sheet under asset side, that is cash account 5,600. 5,600. Next, subscriptions 45,000, that is a subscriptions is a income. Okay, so under income side, income and expenditure account, income side, you can write by subscriptions 45,600. 45,600. Okay, there is adjustments. Okay, we can calculate the adjustment later on. Next, donations. You see here the donations in adjustments is clearly mentioned. It is capitalized, means closing balance sheet. Whatever the donation amount of 11,600, we should be right closing balance sheet under liability side. That is donations. Donations, that is 11,600. Next, it is charity show. Charity show is a income first. Okay, charity show, that is a conducted one, and receipts are income na, so right by charity show. So directly you can write here, there is adjustment to the one by charity show. That is 8,000 rupees. That is 8,000 rupees. So all receipts are completed under receipts and payment account. Now you can go for payments. That is paid for medicines 24,000. So paid for medicine we cannot be taken into expenditure side. Okay, we should be consider only whatever the medicines are utilized. That's we can calculate on how to compute. That is calculation of medicines used, that is utilized. Okay, that is opening stock of medicine, the opening stock of medicine is 800. At purchase of medicines, the purchase of medicines, that is paid for medicine, now it is 24,000. The total amount is 24,800. Now less closing stock of medicines. Closing stock of medicine. The closing stock of medicine is, and the end of the year it is 6,000 rupees. So deduct that 6,000. The 24,000 minus 6,000. So 24,800 minus 6,000. That is 18,000 18,800. This is the medicines utilized. Okay, that is only the medicines utilized amount. You should be taken into income and expenditure account under in expenditure side. Okay, so write debit side to medicines used, that is working note 1. Okay, here also write working note 1. So that is 18,800 worth of the medicines used okay, in the hospital. That is only the expenditure in the one. Okay, next one, after medicines there is a salaries. For salaries there is no adjustments, directly you can write to salaries, that is amount is 22,000. Next, sundry expenses, it is 4,000. Okay, to this one also there is no adjustment to sundry expenses, that is 400 rupees. And by equipment it is in a asset. Okay, equipment it is in a asset. So that is the equipment. Here we should be opening stock of equipment, opening value of equipment and closing value of the equipment, and a purchase in this current year. So the difference amount is called as, okay, that is a depreciation on equipment. So that is also we can calculate, that is working note number 2. Calculation of depreciation on equipment, that is opening value of equipment that is the opening value of equipment is 16,000, means last year. At purchase of equipment, that is a purchase of equipment in the during the year, it is 12,000. After adding 12,000 it is 28,000. Less closing value of the equipment, it is 21,000. Less closing value of it is 21,000. The difference, okay, to this 28,000 minus 21,000 is 7,000. It is called as depreciation on equipment. Why can I called as a depreciation? Means equipment it is an asset. Okay, it is a hospital now. In this every hospital has a some of the equipment, that is a stands, beds, and as whatever is related to surgeries. Okay, equipment, it is a depreciation on equipment, that is like a asset. That is the reason I called as an okay, depreciation. If you come to the medicines, the medicines it is a one of the stock only, but not an asset. Okay, so it is a good, like it's a goods. So that is the reason I called as a material. So that is the medicines used. But if you come to the equipment, that is an asset. That is a maybe it is in a fixed asset also in this hospital. So that is the reason it is called as depreciation. The difference amount is called as a depreciation. Okay, should be clarity on this depreciation and the medicines used. So finally, whatever the depreciation, we should be debited to income and expenditure account. Debited to income and expenditure account, right? To depreciation on equipment, that is 7,000 rupees. Working note number 2. Okay, like this you can identify the one. Next, after equipment, it is a charity show. Okay, it is a payment, not it is expenditure to charity show. 800 to honorarium. The honorarium already we discussed, that is a nominal payment charged by the volunteers, that is only the honorarium amount. Okay, so that is a honorarium 8,000 rupees, and the balance carried on of the one, that is 3,600, means it is closing balance of the cash. Okay, closing balance of the cash means, if okay, you can come to closing balance sheet, that is 31st March 2000, yes, okay, 18 means, sorry, it is as per question, it is 14 and 15 only. Okay, so it is 2015 value. Okay, 15, that is a closing balance sheet. Okay, that is cash 3,600, closing balance of the cash only 3,600. Okay, next one, all the receipts and payments are completed. Okay, we are entered in the receipts and payment, that is income and expenditure account, and the opening or closing balance sheet. Now if you come to additional information, there is subscriptions due. Okay, that is last year subscription due. Okay, subscriptions is a income, that is accrued income. Due means accrued income. Okay, if it is accrued income, it is asset. Okay, you can write opening balance sheet under asset side, that is subscriptions due, that is 1,000 rupees, and the closing subscriptions also, it is 2,000 rupees. Okay, that is closing subscriptions also 2,000 rupees, that is subscriptions due 2,000 rupees. Okay, now, and come to the subscriptions under income and expenditure account, that is last year subscriptions, whatever the last year subscriptions, you should be deducted from the current year subscription receipts, less subscriptions of last year. The subscriptions of last year is 1,000. If you deduct the 1,000, then it is 44,600. Next, add subscription due in the current year, that is current year is 2015. So add, that is a current year outstanding, should be add to one. Okay, so add subscriptions of current year, that is 2,000. The total amount is 46,600. 44,600 plus 2,000, which is equal to 46,600. Okay, that is only the subscriptions calculation here. Okay, next one, after subscriptions due, there is a stock of medicines. Okay, there is a subscription due, double entry completed, and the stock of medicine 800 and 6,000. So that is a double, as per double entry, one time it's completed, and the second time we should be entered in whatever the stock of medicines, you can write opening value under opening balance sheet, that is stock of medicine. It is asset. Okay, medicine is one of the stock only, good. Next, stock of medicine, closing value of the stock of medicine, it is 6,000. So this is a treatment of income under income and expenditure account. It's completed already as per the working note 1. Okay, working note 1. Next one, after medicine, that is a value of equipment. So that is also completed as per working note 2. Okay, and once again we should be write opening value of equipment right under equipment under opening balance sheet, and closing value of equipment right under closing balance sheet. First we can write opening balance sheet. Equipment value, it is 16,000 rupees, and closing value of equipment also write under closing balance sheet, that is 21,000. So as per working note 2, okay, once again, okay, again it's completed. So as per double entry system, twice we are entered. Next, value of building, that is the value of building. Opening value of the building, it is 80,000, right under opening balance sheet. Building, that is the building value is 80,000, and the closing value of the building, it is 72,000, right under closing balance sheet. Building 72,000. So whatever the difference of the one, okay, we cannot enter into the income and expenditure account. Now you can enter, okay, that is building, depreciation on building, because of the building is a fixed asset. Okay, on fixed asset we should be calculate depreciation. So depreciation on building, that is calculation is 80,000 minus 72,000, which is equal to 8,000. 8,000 difference is called as here depreciation of building. Next, donations are capitalized means right under liability side of the one. Okay, whatever the donation amount received, that should be right under, okay, liability side. If it is given a adjustment like this, donations are to be capitalized, or otherwise we can shown as income only. Okay, next one, okay, finally first we can close the income and expenditure account. That is credit side is 46,600, and means debit only is more than credit. Okay, total of debit is 65,000, and the same amount you can write credit side also, 65,000, and 65,000 minus 46,600 minus 8,000, which is equal by, that is the difference is called as deficit. That is 10,400. Okay, it is called as excess of here expenditure is more, na? Expenditure over income. So that is a deficit, na? So this is a deficit, we should be deducted from opening capital fund. Okay, that is under closing balance sheet. Okay, for computation of opening capital fund, that should, okay, for that purpose you should be calculate the difference of opening balance sheet. So there is no items under liability side, only asset side is there. That is 5,600 of cash plus subscription due 1,000 plus 800 plus 16,000 plus 80,000, which is equal to 1,03,000 rupees. 1,03,400. 1,03,400. So that is only the opening capital fund. 1,03,400. Okay, so this is the balancing figure. Same balance amount we can write under closing balance sheet under liability side. So that is called as here opening capital fund, that is 1,03,400. 1,03,400. So for this, if it is a surplus in this income and expenditure account, you should be add to a opening capital fund. But in this question, there is a deficit. So the deficit you should be deduct less deficit, that is 10,400 rupees. If we deduct this deficit from opening capital fund, that is minus 10,400, which is equal to 93,000. Okay, this 93,000 is a closing capital fund. Okay, so now you can total the balance sheet. If it is equal, then it is correct one. 93,000 plus 11,600, which is equal to 1,04,600 on the liability side. So if you come to the asset side, 3,600 plus 2,000 plus 6,000 plus 21,000 plus 72,000, which is equal to 1,04,600. If you follow this method, then it is clear. Okay, so it should be clear, and you should be follow the double entry. Okay, twice you should be entered, adjusted every adjustment as a twice. Okay, either it is in the income and expenditure account or opening or closing balance sheet. Okay, if you enter like this, it is very neatly. So please be follow this is the one, and the solution number is 3. And if you want any new questions and somewhat new questions, and on this one third question also, please be comment to this. Please be comment, and if you have any doubts, okay, please be contact 74168 and for class 12th, okay, for 12th class students, there is a live classes also is going to be started. Please be contact to this number, okay, WhatsApp or call. Thank you.